Thinking about holding gold or silver inside a retirement account might sound simple at first. A lot of people assume they can buy precious metals with their IRA and keep them close by, maybe in a home save or a safe deposit box. But that assumption is exactly where many costly mistakes begin. When precious metals are held inside of a self-directed IRA, the rules are very different from buying metals personally. Storage rules matter. Possession rules matter. Purity standards matter. And distribution rules matter. And if those rules are not followed correctly, the consequences can include taxes, penalties, and even the loss of the IRA's tax advantage status. In this video, we're going to walk through how precious metals in IRAs work from an administrative and compliance perspective, what the IRS expects, and some of the most common areas where account holders get tripped up. So welcome back to Mountain West IRA. We provide administrative services for self-directed IRAs, and our goal is to help account holders understand the administrative process and the rules that apply when alternative assets, including precious metals, are held inside a retirement account. Precious metals are one of the most talked about asset types in the self-directed IRA space, but they are also one of the most misunderstood. A lot of the confusion comes from the fact that people focus on the asset itself and not the retirement account structure around it. That structure is what matters. So, why storage rules matter in a precious metals IRA? When precious metals are purchased inside of an IRA, the metals are owned by the IRA, not by the individual account holder. That distinction is extremely important. Because the IRA owns the metals, the account holder cannot personally hold, store, or control those metals while they remain IRA assets. The IRS requires that physical precious metals owned by an IRA be stored through an approved third-party depository. This isn't just an administrative preference. It's part of maintaining the proper IRA structure. If IRA-owned metals are taken into personal possession before a proper distribution occurs, the IRS may treat that event as a distribution from the retirement account. Depending on the account holder's age and tax situation, that can create taxable income and possibly an additional early withdrawal penalty. So, while buying metals personally and buying metals through an IRA may seem similar on the surface, they are treated very differently under IRS rules. Can you store IRA gold at home? This is one of the biggest questions people ask, and the answer is no. The IRA-owned precious metals cannot be stored at home in a personal safe or in a safe deposit box under the account holder's control. From time to time, people come across phrases like home storage IRA and assume there is a compliant way to personally hold IRA metals while keeping them inside the retirement account. That idea creates a lot of confusion. Under the standard IRS framework for physical precious metals held in an IRA, personal possession is not allowed while those metals remain IRA assets. If the metals are in your possession, the IRS may view that as a distribution. That means the value of those metals could become taxable in the year the possession occurred. And if the account holder is under the age of 59 and a half, a 10% early distribution penalty may also apply unless an exception is available. This is one of the most important areas to understand because it is also one of the most common sources of costly mistakes. So, What is an IRS-approved depository? An IRS-approved depository is a professional third-party storage facility used to hold IRA-owned precious metals in a compliant manner. These facilities are built for secure storage and typically provide safeguards such as insurance protections, inventory controls, record keeping, and reporting support related to retirement account assets. They are separate from the account holder, and they are separate from the IRA administrator. Their role is to physically safeguard the metals while helping preserve the structure required for the IRA to remain compliant. What matters most is not just the physical location of the metals, but whether they are held in a compliant third-party arrangement that supports the IRA's tax advantage status. So, what precious metals are eligible in a self-directed IRA? Not every coin or bar is eligible to be held inside an IRA. The IRS imposes minimum purity standards for precious metals in retirement accounts. Commonly referenced thresholds include gold at 0.995 fine, silver at 0.999 fine, platinum at 0.9995, and palladium also at 0.9995 fine. There are also important rules about what types of products qualify. Many collectibles and numismatic coins do not qualify for IRA ownership. On the other hand, certain widely recognized bullion products may qualify if they meet the applicable standards. The key point here is that value alone does not determine IRA eligibility. A metal product can be valuable, rare, or popular and still not qualify for IRA ownership. Eligibility depends on whether the metal and the product meet IRS requirements. Let's talk about segregated versus commingled storage. Once metals are stored through a depository, account holders may hear two common terms: segregated storage and commingled storage. Segregated storage means the specific metals purchased for your IRA are stored separately from metals held for other account holders. If a future in-kind distribution is taken, the account holder would typically receive those exact pieces. Commingled storage means that the metals are stored together with metals owned by other account holders, as long as they are of the same type and purity. Ownership is tracked through the depository's records, often by weight and classification, rather than preserving the original individual pieces. Both storage methods can be compliant. The difference often comes down to administrative structure, personal preference, and cost. Segregated storage frequently comes with higher fees because it requires separate handling and tracking. This is one of those areas where understanding the structure is important and where account holders may want to discuss the implications with their own qualified advisors. Okay, what does Mountain West IRA do in the process? Mountain West IRA is an administrator for self-directed IRAs. Simple. We help facilitate the administrative side of the account. That can include documentation, transaction processing, and coordination related to permitted IRA investments, and of course, education. What we do not provide is investment recommendations, legal advice, or tax advice. And we don't tell you what metals you should buy. We're not going to tell you, oh, buy gold now, oh, buy silver now. That is totally up to you. This is a self-directed retirement account, which means you are in charge. Our role is to support the administrative process so the account can hold alternative assets within the rules that govern self-directed IRAs. When precious metals are involved, that means helping make sure the IRA structure is followed and that approved storage arrangements are used as part of the transaction process. Here's an important one. What is a prohibited transaction? A prohibited transaction is one of the most serious compliance issues an IRA owner can face. In simple terms, a prohibited transaction can occur when the IRA engages in a transaction with a disqualified person or when the account owner receives an improper personal benefit from IRA assets. Disqualified persons include the account owner's spouse, certain lineal family members, and entities they control, as well as fiduciaries. In the context of precious metals, examples may include personally storing IRA-owned metals, we talked about that one, selling metals you already own to your IRA, absolutely not. Buying metals for the IRA from certain disqualified persons, or using IRA-owned metals for personal benefit before taking a proper distribution. The consequences can be severe. A prohibited transaction can cause the IRA to lose its tax advantage status and be treated as distributed, which may trigger significant tax consequences. Because of the stakes involved, this is an area where qualified tax and legal guidance is especially important. So, what happens if you accidentally take possession of IRA metals? If IRA-owned metals end up in your personal possession outside of a proper distribution, the IRS can treat that as a taxable event. That would mean the value of those metals is included in income for that year. If the account owner is under 59 and a half, an additional early distribution penalty may also apply, unless an exception exists. Even if the mistake was unintentional, the consequences can still be significant. That's why it's so important that precious metals move through the correct channels from the very beginning. How they are purchased, how they are shipped, where they are stored, and how they are distributed all matter. If someone believes a mistake may have happened, it is important to speak with a qualified tax or legal advisor right away. So, can you move metals you already own into an IRA? No, you cannot contribute precious metals that you already own personally into an IRA. This is another area where people sometimes get caught off guard. IRA contributions must be made in cash, subject to the contribution rules and eligibility requirements that apply to the specific type of retirement account. Once the funds are inside the IRA can then use those funds to acquire eligible precious metals through a proper transaction. Trying to move personally owned metals into the IRA can create serious compliance problems, including prohibited transaction concerns. The structure matters from the start. Now, how do distributions work from a precious metals IRA? Well, when the time comes to take assets out of a precious metals IRA, there are typically two general paths. One option is an in-kind distribution, where the physical metals themselves are distributed to the account holder. The other option is a cash distribution, where the metals are liquidated and the proceeds are distributed in cash. Either way, the normal IRA distribution rules still apply. For a pre-tax IRA, like a traditional IRA, the distributions are typically taxed as ordinary income. If the distribution occurs before age 59 and a half, an early distribution penalty may apply unless an exception is available. Also, contribution rules still matter. Even when a self-directed IRA is being used to purchase precious metals, the contribution rules tied to the account type still matter. That means things like annual contribution limits, income-based eligibility rules, and contribution deadlines may all still apply depending on whether the account is a traditional, Roth, SEP, simple, or other eligible retirement account structure. This is important because some people focus entirely on the asset purchase and forget that the underlying retirement account still has its own funding rules. Why education matters so much with precious metals IRAs. Precious metals are one of the most misunderstood asset categories in the self-directed IRA world. People often focus on the appeal of the asset and overlook the rules that govern how the asset must be held inside the account. But with IRAs, the structure is everything. Storage rules matter, purity standards matter, distribution rules matter, prohibited transaction rules matter. Even a well-intentioned mistake can create tax consequences if the account is not handled properly. That's why education matters so much. It's also why it is important to work with professionals who understand the administrative process and also to consult qualified tax, legal, and financial advisors for guidance specific to your situation. Okay, let's kind of sum this up here. A precious metals IRA is not simply about buying gold or silver. It's about holding eligible metals inside a tax-advantaged retirement account while following the rules that keep that account compliant. The IRS does not allow personal possession of IRA-owned metals before a proper distribution. Approved third-party depository storage is, of course, required. Only certain metals and products qualify, and transactions involving personal benefit or disqualified persons can cause major issues. The more you understand these rules, the better prepared you will be to evaluate the administrative process, avoid common mistakes, and ask better questions as you continue learning. If you found this helpful, please be sure to like this video, subscribe to the Mountain West IRA YouTube channel, and turn on notifications so that you can be alerted when our new educational videos come out. If you have any questions about the administrative process for self-directed IRAs, visit us at mountainwestira.com, call us at 866-377-3311, or use the QR code in the corner to schedule a time to talk that works best for you. And if there's a topic you would like us to cover in a future video, leave it in the comments below. We would love to hear from you. Mountain West IRA provides administrative services and education only. We do not provide investment, legal, or tax advice. And please always be sure to consult your own qualified advisors regarding your specific situation. Thanks again, and you have a great day. Bye.